This has been a very interesting budget for businesses, and there are three major impacts that business owners need to think about. The first of those is national insurance, the second is capital gains tax, and the final one is inheritance tax. So for national insurance, they've increased the employer's rate of national insurance by 1.2% from 13.8% to 15%. But they've reduced the point at which employers start paying national insurance from £9,100 to £5,000. Now, that means for an employee on an average salary of £36,000, the employer's national insurance cost will go up by nearly £1,000. The second tax I mentioned is capital gains tax. Now, this is being increased from 10% and 20% to 18% and 24% for basic rate taxpayers and higher rate taxpayers. Now, the new rates are the current rates that are used for residential property sales. So the good news for landlords is their tax on sales of property will not increase. However, for business owners, they will be subject to increased taxes when they sell their businesses. However, there is some good news in that business asset disposal relief, which everyone thought might be abolished, is being retained. However, the current tax rate of 10% will be increasing next year to 14% on business asset disposal relief and to 18% the following year. Now, that does mean that there will be more tax to pay when a business owner sells their business. However, if they're selling for £10 million, the additional tax will be about £440,000, which is about 4.4%. The third tax I wanted to talk about was inheritance tax. Now, this tax is payable by business owners and farmers when they transfer their businesses to the next generation. Now, this can be on death or as a lifetime gift. At the moment, business owners are entitled to business property relief and farmers to agricultural property relief. And these two reliefs effectively give 100% exemption against inheritance tax on the transfer of those assets. So there is no inheritance tax to pay. However, the government have decided to change the rules on these, and so only the first £1 million in value will be exempt from inheritance tax, and all the value above the £1 million will be subject to a 20% or an effective 20% inheritance tax rate. So that means that for business owners and farmers, on transferring their business to the next generation, there is going to be a tax bill that wasn't there previously. Now, this may affect their decisions on when they wish to transfer those assets, either on death or in their lifetime, because it could affect the amount of tax they pay.
So the main headlines with regard to the financial planning clients we had today from the budget, in no particular order, the state pension will increase by 4.1% in 25-26. And then in regards to capital gains tax, the main or the lower rate of capital gains tax has increased from 10 to 18%, and the higher rate from 18% to 24%. However, this does come off the back of reducing capital gains tax allowances, which have reduced from 12.5 or 12,300 in 2021 down to 3,000 in 24-25. There's also been some quite good changes with regards to some of the business property relief, but mainly in regards to pensions. Inherited pensions are now subject to inheritance tax from April 2027. However, just reading some of the literature on this, what has come out of that is that there will be some notifications and a alliance in terms of for the next 2 years in regards to looking at those changes and going out to for general consensus in the wider financial planning area. The pensions in regards to assets are currently exempt from inheritance tax and are not classed as part of your taxable estate in the event of your death. However, this does represent a fundamental shift in how individuals think about accessing their money in retirement. At present, it makes sense to access ISAs and other forms of savings first before touching pensions. And we've already received a number of emails from clients wanting to review the amount of money that they're drawing from their pensions. Some of the biggest changes have been introduced with regards to inheritance tax planning. The extension on the freeze of the current allowances from 2028 to 2030. Business and agricultural property relief will be limited to £1 million from April 2026. And any amount in excess of this level will receive 50% relief, thus reducing the effective tax rate above £1 million to 20%. And then just regarding some questions, what are the current allowances with regard to inheritance tax? Currently, everybody receives a nil rate band of 325,000, and if you're leaving your main residence to your lineal descendants, then you would also receive a residential nil rate of 175. So the total relief is at £500,000 per person. And then just regarding AIM shares and the changes to business property relief with regard to those shares, AIM shares will now also have an effective inheritance tax charge of 20%, which was, to be fair, a better result for the junior market than a complete eradication of the tax benefit. And in summary, there have been some far-reaching changes with regards to both capital gains tax, inheritance tax, and pension planning. And we would advise, obviously, our clients. We will be in contact with our clients to look at what changes need to come into effect.
It's been an interesting year for M&A because I've seen two complete sides of the spectrum where business owners have put decisions on hold, particularly with regards to either, succession and their options with regards to the future, waiting to see what comes out of the budget. But then we've also seen a flow of activity with business owners who are in a transaction, trying to get those transactions completed by today. And actually, we've seen immediately overnight capital gains tax rates increase at the high rate from 20% to 24%. So if anybody's, is in the middle of a transaction, they haven't quite got that over the line, there is an immediate impact to them. From an M&A perspective, the biggest changes that have been discussed in the budget are around capital gains tax rate increases and also changes to business asset disposal relief. So we've seen that the lifetime allowance of £1 million will remain in place, but it's going to be phased, and the tax rate at the lower rate is going to increase from 10% to 14% to 18% over the next couple of tax years. So what this means for business owners is that if they are thinking about selling, there's obviously a timing issue and a window of opportunity to try and capitalise on the best rates that are available to them. However, just be mindful of the fact that at the lower end of the SME market, if we're looking at, say, for example, a £1 million sale for a sole shareholder, the actual tax rates that they will pay, the difference is very marginal. So you wouldn't avoid doing a transaction for the tax that you're actually going to pay. It's about putting yourself and working with an advisor who will help you to maximise the actual consideration in your hands and get the best deal that's available to you, which will be about finding a buyer, coming up with the right deal structure, and coming up with a structure that really works for you. On the other end of the scale, on a larger sale, let's think about a sale where the consideration might be in the region of £10 million for a sole shareholder. Over the next couple of tax years, there will be changes to, obviously, the rates and what they will receive in terms of net proceeds. But again, when we look at the 2 years down the line, when capital gains tax rates will be 24% and BDAR will increase to 18% at the £1 million threshold, in their hands, the actual amount that they will receive will be £440,000 less. So effectively just over 4% impact on that sales consideration. So although it's not to be dismissed, it wouldn't be a reason not to pursue a transaction. So one of the options for business owners when considering future succession is selling to an employee ownership trust. Interestingly, in the budget, there was no mention of employee ownership trusts, but it has been released that effective from today, there are tightening up of the rules around trustees. where they are resident and their independence, which is in line with consultation papers that have previously been released. So no major surprises there on that front.
The headlines from the budget from a HR perspective are really around the national living wage increase by 6.7%, so from £11.44 per hour to £12.21. Also then for those that are aged between 18 and 20, the increase goes from £8.60 to £10. And then for apprentices, they'll receive a larger increase, so from £6.40 to £7.55. There's also employers' national insurance increasing, a big increase from 13.8% to 15%. And then finally, the freeze on income tax and national insurance thresholds not being extended post 2028. Ultimately, really, it's gonna mean that it's going to cost more to employ people. The employers' NI increasing, and for those who employ at the national living wage and young workers or apprentices, we'll see an increase in their payroll each month from April 2025. So for those employees that are paid the national living wage, or their young workers or apprentices, they'll see an increase in their pay. So it'd be a really good thing for them. For all employees, the income tax and national insurance thresholds will remain the same until 2028, but then they'll be uprated in line with inflation. So they may see an increase in the amount of tax that they pay.
So any changes around business rates? Probably the key takeaway is the announcement around relief for the retail, hospitality and leisure sector from the business rates year commencing April 2025. Chancellor announced that the relief around this sector will be maintained but reduced down to 40% from the current level of 75%. Now, what this means for, let's say, a small business which has got a rateable value of £20,000 on their property. Currently, they'll be paying a rates bill of just under £2,500 this year. And moving into the next rating year from April 2025, their rates bill will be increasing to somewhere in the region of £6,000 a year, which is a 140% increase on their bills. So quite a challenge for operators in that sector. Chancellor also announced that there'll be an overhaul to the business rates related, I think, just to this sector. So it'd be interesting to see some more information on that over the next couple of days. Other announcements of interest in relation to business rates: the small business rates multiplier is going to be frozen next year. So currently at 49.9p in the pound, this is going to remain the same for the rating year from April 2025. Nothing was mentioned around the standard rate, so assumption at the minute is that this will be increased by an inflationary adjustment next April. So were there any changes around stamp duty? Yes, is the answer. There was an announcement that the SDLT rate on second home purchases is going to be increasing from 3 to 5%, which is obviously quite a jump for people affected by that.
Well, just reflecting on the budget announcements today, there's been no real surprises on VAT. VAT rates have stayed the same as they were, with the 0 rates, the 5% rate and the 20% rates all remaining unchanged, and also no change to VAT registration thresholds, which were increased back in April 2024, so there's no change there either. Most of us were expecting the government to confirm that VAT would be introduced on private school fees from 1st of January 2025. No surprises again. The Chancellor confirmed that that would be the position. So although the measures which were announced previously were in consultation, we now know that that change indeed will go ahead from 1st of January 2025.
As expected, there are no changes to the R&D tax relief within the budget. However, the increased employers' national insurance contributions do mean that there is a larger pot of eligible costs which can be claimed for each company utilising the scheme.